We're going to start on the global side of things with Wells Fargo, which is the largest US bank by market capitalization.
Yeah, so we talk about this one because it is one of those that I like and that I think ought to be considered if you're looking at an international portfolio. Within the US context, it is the largest by market capitalization, but it's also the largest by retail footprint, branches, and is really focused on the corporate lending side of the business as well as retail transactional banking and mortgages. So they're not typically one of those that has traded a lot of fixed income or done anything exciting with Forex. It's a much more boring business that has a much more steady and reliable income projection.
It acquired Wachovia in 2008 and its headquarters are in San Francisco. Market cap here, $297.75 billion US dollars. PE of 14 and a dividend yield of 2.59%.
Yeah, so the interesting thing about these guys is that they had an extremely good financial crisis, which is a bit of a bizarre thing to say. How can you have a good financial crisis? Because I was saying earlier everyone did badly. Well, the logic of it was the following. They came into the crisis being focused on the west coast, that means California coast of the United States.
Thanks
Their history, of course,
geography lesson.
the history, of course, was Wells Fargo has the logo, which is the little stagecoach, okay? So they were involved with the Wells Fargo driving of money around in the old cowboy western days, and then they transferred that into telecommunications and banking critically and providing finance and so on. So they used the crisis to buy a huge East Coast US bank. Now, East Coast, that's where New York and Boston are, right?
Thank you for that clarification.
And Wachovia was a massive, massive player in the East Coast, and they were headquartered in North Carolina in Charlotte, which is the state there close to.
So you're saying that they had a good financial crisis because they used depressed levels to bulk up their organization.
Exactly.
By bolt-on
they were able
acquisitions.
to buy because they were in a little bit of a stronger position, and historically they hadn't really been as active in any of the kind of speculative trading on those subprime mortgages and all that other garbage.
The kind of activity that got everybody into trouble.
So if you look at the 5-year share chart, which we should have available now, look, that only shows the post-crisis period, but you can see them steadily making good progress. And as a whole, they have emphasized the parts of the business which are low risk. And right now, they are looking at lowering costs, like all of the banks, and that's why they're moving higher. Price to earnings ratio isn't high.
At 14.
Very reliable performer.
Have you got exposure to Wells Fargo in your international portfolios?
We do. I own some of those myself. Our clients own those. It's certainly done well for us, and we think it's going to continue to do well. When I talk about costs, remember banks typically have a cost to income ratio which is sort of between 50 and 60%. That means 50 to 60% of their net costs are staff and physical infrastructure and IT and bank branches. How are they getting that lower? Well, they are cutting their branch infrastructure because they're forcing people to use
technology.
Online banking. And they do simple stuff like mortgages, as I indicated there, corporate lending, and individual lending to reliable individuals, but very little trading and proprietary dealing. They do have an investment bank.
But the overriding theme here is it ticks all the boxes, but from a size perspective, if you believe in the banking environment, you can't go wrong with Wells Fargo?
Indeed, and they are largely US focused, very little international market footprint. So when you buy them, you're not buying a organization which is going to expand into China or into Europe or into South America, all the sort of frontier markets.
They know their territory, steady as they go.
The world's biggest economy, etc., etc. Yeah, I think it's a very sensible way to go when you're going into the international market with banks.
You are hot.
Good.